Assalamualaikum warahmatullahi wabarakatuh. My name is Raudatul Jannah binti Jainal. My metric number is 056030. We are from Bachelor Islamic Wealth Management Semester 4 and we are from Group 2. We will present about credit risk management for Islamic banking. For my part, I will give introductions about this topic. Okay. Financial institutions commonly tackle down any issue that might arise open credit regulatories by implementing credit risk management, or we can call is CRM, into their system. Okay, I will tell about the definition about credit risk management. CRM can be defined as a practices of mitigating losses by understanding the adequacy of a bank capital. It also refers to the probability of loss due to the borrower failure to make payment on any type of debt. Next, credit risk in Islamic banking is when people who have made a credit, or we can call a borrower or a counterparty, have failed to meet obligations following agreed terms.
Assalamualaikum. My name is Nur Aisha Amani binti Zufar Ali and my metric number is 056974. Okay, today I will present about literature review on topic credit risk management for Islamic banking. What is credit risk management? Okay, credit risk management is the practice of mitigation losses by understanding the adequacy of a bank's capital and loan loss reserve at any given time, such as a process that has long been a long challenge for institution financial. I mean, we face many challenges, many risks, many problem about the credit. People need to face credit risk, and because of this, people should manage their credit risk in a good way to avoid them from face any big problem or challenge in future. Now we go to the main function of bank. The role of the bank is perform a financial intermediary. For example, bank is one the important institution that people can put their saving, can make a investment, can make a loan, and so on. Okay. The main function of the bank is to convert the majority of the short-term deposit into the long-term deposit credit. Okay, now I want to share about different perspective from a few authors. Okay, the first author is Lauzis et al. 2012. He analyzed that the important factor of credit risk in the Greek banking system. Okay, so this Lauzis focus on the world's banking system. Using non-performing loan (NPL) of a different loan category as the dependence variables. Okay, and they found that the non-performing loan of Greek bank are majority defined by macroeconomic variable like unemployment, GDP, and also interest rate. Another perspective is from Ahmad and Ahmad 2004, which is he analyzed that the main elements affecting credit risk of Malaysia IBS and iterated that risk-weighted assets management efficiency and size show a significant impact of Malaysia IBS credit risk. What the product our bank provide will open more credit risk for them actually.
Assalamualaikum. My name is Zuro Dabetuslan. My metric number is 056079. Affirmers. Credit risk in Islamic banking is when people who have made a credit, or we call a borrower or counterparty, have failed to meet its obligation in accordance with agreed terms. Credit risk therefore arise from the banks dealing with the lending to cooperate individuals and other banks or financial institutions. This situation will make a lender may not receive the owed principal and interest, which result in an interruption of cash flow and increased costs for collection that will lending to lose. And then credit risk also refers to the probability of loss due to a borrower failure to make payment on any type of debt. After that, the common consideration in financial decision is risk appraisal. Since deciding on an objective, the first step is to assess the force that could potentially change the trajectory of it, preventing the target from being reached. And then traditional banks have the framework and resource for risk assessment and regulation that enable them to pick a degree of risk that the bank investor are prepared to accept. Credit risk management is something that traditional banks have built.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Khadijah Hakimah binti Cik Muhammad Zaid. Metric number 054836. And for my part, I will talk about the credit risk management and risk analysis practice in Islamic bank. So as we know that risk analysis is the most common factor in financial decision. Okay, financial decisions are based on what is expected to happen in the future. Expectations are not available unless the event happen or as expected. Similarity and analysis of the potential for deviation from the expected cost is exactly what is involved in the risk study. Okay, the goal is not to eliminate the danger from the impossible task, but the purpose is to measure the risk involved to ensure the risk decision maker receive a compensation in proportion to the risk involved. In credit risk, there are several sub-issues, which is concentration risk and settlement risk. Concentration risk is when there are a large number of exposure to parties that share similarity characteristics. Meanwhile, settlement risks arise when clearing or trading agents or third party proceed a transaction for the other parties. Indeed, that a financial institution has recognized the importance of measuring credit concentration risk in addition to the credit risk of individual loans, that is examine not only individual risk but also the total credit risk characteristic at the portfolio level. The primary function of bank, whether the conventional or Islamic, is financial mediation. By financial mediation, we mean the banking intermediating between the creditor, the resident group, between and the debtors. The conventional bank do this work by borrowing from the first group and then borrowing from the second group. On the other hand, Islamic bank do this work by accepting large sum of money based on the mudarabah from the saver, then using this fund in way that the condition to participate of trading. The meditation institution make asset change in the following way. Okay, which is one is conversion of non-liquidity asset to liquid asset, which means that the bank accept the public fund and automatically deduct less risky instrument that the people use instead of cash. Then on collecting cash, noted conversion into non-liquid asset, which is known as investment. Second is conversion of short-term asset to long-term asset. Claims to which means that claims to financial intermediation on a short-term basis, which is a current account, deposit, certification, and investment account, and their asset are long-term asset. Bank receive part of their money from low interest rate due to the short-term loan and hard. Last but not least, the importance of credit risk management. Okay, the risks that bank face in their operation are of many types, which an interest rate, exchange rate risk, credit risk, and other. It is considered the most important type of risk faced by a bank in a relationship with an asset owner. The relations related to the debitor ability to pay within the stipulation time frame and follow the term of the agreement. Okay, if the debitor fail to keep his obligation, it leads to the loss of creditor, which is a bank, and therefore become a risk to the bank. Okay, last but not least, the importance of CRM is can help both conventional and Islamic bank to minimize credit risk and any form of risk in the most of the models or financial that they use. Okay, as we know that conventional bank face credit risk in almost all of their risk because the relationship between the bank, the creditor, and the debitors in all cases. But in conventional risk, there will be many usuri or riba in their transaction. Meanwhile, in Islamic bank, are also face this risk factoring in many of finding many of the funds they are spent because this Islamic bank want to prevent any usuri or riba in their transaction, so they will face many liability in the transaction. Okay, it is well known as mudarabah, istisna, and installment sales are delay in sales that result in debt to the bank account. The basic risk factor all of this contract in credit risk. Okay, some risk property debt rather than the financial debt, but also including the credit risk. Mudarabah and musyarakah, on the other hand, are particularly contract and the fund provided by the bank to interest are not liability. As we know that risk exists in every contract, that mature in the future, and there is no doubt that this was known for them. It is for the reason that the pyramid contract of Sharikah, Mudarabah and Salam and so on, as each of these contracts involved to transfer or sharing of the risk. However, the economy circumstances prevent in those days, and the methodology adopted the contract did not attach the significance to the idea that is given to the modern financial transaction.
Assalamualaikum, my name is Liana binti Zulkifli, metric number 054706. So towards the conclusion, I would like to stress on the point that we have been mentioned and focused on since earlier, that is CRM is proven to be very important and needs a proper and well-functioned system in every Islamic institution, including Islamic banking. Without it, an institution may have a fall down if they are unable to cope with the risks they face on. From our reads and research, Islamic banking are having greater risk to be compared with conventional banking, since we need to keep in line every practices with Sharia Islam while avoiding every malpractices that have been applied in our religion. However, since we are not having a definite Islamic structure, conventional banking mechanism is used and have been adjusted adequately to keep it halal in completing the Sharia system. We also would like to highlight that it is not impossible to have a better designed and well-functioned CRM system in Islamic institutions in the future. This is because the system is actually covers multiple of Islamic contracts such as Ijara, Mudarabah, Murabaha, and etc. that would be very helpful in order to imply the either rules to creating a structure and deal ethically with upcoming risks. That's all from us. Thank you.